What's happening, Bulls? We're back after a well-needed hiatus. Sometimes when things are crashing, when the market is on fire, you need to just step back, watch that fire burn for a bit. There is nothing more powerful in trading and investing than to pull yourself out and look inside from the outside. It's very powerful and it's very well needed, especially in times of either high emotion, destruction, uncertainty, fear, doubt. You know the drill. Basically, what we're going to do here is we're going to have another attempt at non-stop continuous content, basically in the morning, like right now. First thing, be uploaded onto YouTube. We'll go through the latest news and a couple of videos that I'll find valuable. Again, 8 years in the industry, made every single mistake that's known to man. So if you are somebody that is wise, then you will learn from somebody else's mistake. Smart people learn from their own mistakes. Wise people learn from other people's mistakes. So I'll do what I can to share what I know. We'll go through. Obviously, this is aimed at Aussies as well. I don't think I don't think there's any Aussies really doing that much justice for the crypto market, in the sense that they are not. They are always talking with a bias. So I will try my best to remove the bias, tell people straight exactly what's going on and how it is, because that's what's needed. That's what's needed. So we're obviously going to be fighting our own biases. That's basically my task: fight my own biases, and then see if you can fight your own biases. One person, well, there are a few Aussies, and I'll start with one, but basically what we're going to do here is we're just going to go through the news, go through some relevant videos. I've been storing them over the past couple of weeks, but I'm just going to show you the ones that I find that are still relevant, and are deemed still relevant. And then we'll just have a look at a couple of the main charts, quick look at Bitcoin, Ethereum, S&P 500, and gold, all right? And then tonight, we'll do some quick videos where we roll through the top 100 altcoins and we cruise. We'll keep that for the nighttime. The morning, we'll keep updated with what's going on. So first and foremost, we've got Jason Pizzino. So he is an Aussie. And, you know, yeah, respect to Jason Pizzino. All right. But his failed Bitcoin narrative. So this is just some things I just want to start off this video with a bit of perspective. So it's a really good time to reflect on all the failed narratives and how no narrative, no matter how powerful, over the past 8 years of me experiencing this, has been able to stop a market turn. You know, no matter how good something is, it doesn't matter at the end of the day. All that matters is the overall global markets, where the liquidity is, where the smart money or the big money are positioning, and the underlying assets themselves that you're trading. What narratives can do is briefly change the trend direction or extend a trend direction, especially to give them more of a blow-off result to what was already happening. So narratives are in turn powerful, but they're not enough to save anything or anyone. So do not get attached to any narrative. I've watched them all fail, basically. I've watched them all fail. And there's the other thing, is that just because, let's just go, for example, let's have a little look, right? So, you know, the M2 money supply. Okay, so that's an important one. These are all very important ones. Global liquidity index, super cycles, must have a blow off top, crypto, President Trump, infinite money glitch, Tesla buys Bitcoin, El Salvador. You see, all these things, they are having a positive impact, but they're not going to be able to turn Bitcoin to 500K just in right when you want it to, right in that time, just for it to be able to just continue it on, and just there's nothing that has been powerful to just war march Bitcoin just fucking the whole way to the end. There's still nothing. There's still nothing has happened along those lines at all, ever. But in saying that, also, it'd be ignorant to think that they don't help at all. So these are all some things. Halving event, Bitcoin ETFs. You know, where the Bitcoin price is right now at 66K, which is arguably very close to when the ETFs released, right? So, just to keep it simple. No matter what you hear, these things can help, but nothing will rely on nothing. No ideology, no narrative. Do not get attached to anything thinking that it's going to save your bad entries, your bad positions, your bad portfolio. Okay, so that's just what I wanted to start with. Bit grim, but listen, this will probably get 0 views or maybe 1 view, because what I'm going to do is I'm just going to tell you how it is. Call a spade, if you will. So moving on to the next thing, we're just going to go straight into the fucking cauldron here. Eppenstein. We're going to have a little look at Eppenstein. He's the main thing. Like, you can get some interesting takes off here. One is that he's a fraud and he actually wasn't a trader, even though he claimed to be. But two, let's just have a little listen to what he says, because it's quite interesting take.
If you talk to really experienced and successful traders and you ask them how they know what's going on, they can't give you an answer. They don't know. They feel it. They can feel the way the market's moving. They can feel the way the stock's moving. And that these are not very well-defined terms. It's difficult to put in mathematics terms. How did I feel it? You could look back and make guesses what I was seeing. But great traders feel it and then act on their feelings. That's the difference. Many people feel it but are afraid because they want a mathematical justification before they take that next. If you talk to real...
Now, there's some truth to this in the sense where if you are trading a lot, and you have been trading a lot, intuition does kick in with it, but you can only be successful within your intuition as long as you stay within a rule set. Okay, so following intuition works. I've seen it work. Sometimes it is hard to explain an entry. You just you knew it, you felt it, you sort of get in touch with the market. If you're looking at an asset price every day, multiple times a day, you almost feel the asset. It's a very strange feeling. If you try it, you might get it. But then within that, there will be lots of oscillating signals that will, false signals. Once you start being proven wrong, you need to abort and you need to stay within the rule set. So following an intuition can definitely be profitable, as long as you stay within a rule set and you are willing to change your idea. Now, this video from Eppenstein was obviously made before they faked his death. So just an insight of what it just shows that he's got fucking no idea, because they say that he was talking to good traders. I mean, he said he was talking to good traders, but he's actually claimed that he made his money being a trader. So that's obviously false, because he's got no idea. Now, more important stuff. I just wanted to start with a bit of a laugh. A laugh about something that is disgustingly serious. More important to the fact is Larry Fink. So who is Larry Fink? He is the largest monetary manager in the world. Okay, BlackRock CEO, but now he is also he's basically taken over Klaus Schwab, Dr. Evil's. This is going to get banned from YouTube already, I can tell. He's basically taken Dr. Evil's place as leader of the World Economic Forum. Now, in saying this, Larry Fink's ideology, especially about crypto and tokenization, oddly aligns with most of the crypto market, big brains or influencers in many ways. The understanding of the future, the understanding of the impact and the role that tokenized assets are going to have, the power of Bitcoin as somewhere to store your wealth. This is aligned. Now, where it most likely parts is the ulterior motive that he has, which would be to basically strip everybody from their assets, own everything, dominate the world, maximum power, absolute power corrupts absolutely. We know this. But again, when both sides' thoughts align, then I'm sure you could sort of understand that there's a very high likelihood of it happening, because it's almost like, it'd be surprised if everybody got caught wrong.
I would say the biggest question from central banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I will make, I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving, ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
So it's sort of like when Larry Fink talks, everybody listens, nobody really backchats. Everybody waits for Larry Fink's letters, his famous letters that he does. The whole market reacts to how Larry Fink writes his letters, for lack of better words, articulates himself. So, when Larry, you can sort of see that table was filled with some very large names, and they're all just quietly listening to Larry Fink say that everything's getting tokenized. And when you've got billionaires sitting at a table that have made their money in a certain way, and they hear that things are going to change, that's not really something that they want to hear. But the whole world's going to be basically pushed into tokenizing assets in cryptocurrencies, or at least blockchain technology, regardless. So this is inevitable. Moving on to the next thing, which is more Larry Fink briefly saying this.
There is a role for gold, and there's a role for Bitcoin, which I believe are assets of fear. You own these instruments if you're frightened of the debasement of your currency. You own it if you have financial insecurities, or you own it if you have physical insecurities and worries. So that's one of the foundational issues of my journey in understanding crypto more. But today there's about $4.1 trillion sitting in digital wallets, growing very rapidly.
So basically what he's saying is what you already understand, and that is that gold, Bitcoin have extremely large similarities. And again, Larry Fink, largest asset manager in the world, saying that Bitcoin is a way to escape the currency debasement, which is getting exponentially faster and exponentially larger right now. So your dollars, cash is trash. Your dollars are just basically being completely evaporated. COVID was, here's another YouTube ban incoming. COVID was an excuse for them to basically, double the entire global money supply, expand inflation, and then blame it on that. And it's like the unquenchable thirst. The standard gets set. People get numbed to the feeling of inflation, rapidly rises, potentially more events. What's the next event? Double, 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 double. And all of a sudden, it's good for property owners, asset owners, especially, valuable asset owners, especially assets that are built for currency debasement, for example, precious metals, land, obviously. So maybe the land being more important than the piece of real estate itself. Currency debasement assets, and of course Bitcoin, and potentially other altcoins, if you deem them to be that, you should definitely look at the chart to make your mind up. So these things are going to be probably most likely the best performing, the safest, best, so the best risk reward combination assets there are, and that is safe, anti-currency debasement, opt-out trades. A little bit off topic here. If you were around in 2017, you would know John McAfee. He was the main character of that 2017 arc. Basically, everybody was sitting on, I think it was either Twitter, or I think it was still Telegram at that point. Early Telegram? Well, what do we have? I think it was, or Discord? I think it was early. I have to check. It might have been Telegram. Might have been. It might have been Twitter actually. You'd basically just have alerts set, and you would just jump on as soon as McAfee put his new post. He would just pump and dump every single shit coin, and they would fucking 10x, literally 10x. As soon as he posted it, then the bots got wind of it, and you couldn't beat him, or nor could you choose what he was going to pump next. He was the main character, and you see where he is now, and that's typically what happens to most main characters in crypto. But if you have an idea of who, there's been a lot of chat lately about who was the creator of Bitcoin, and the person that we had in that, old mate, the one that apparently, old mate was in these leaked emails recently, was talking about, there's FUD really about who made Bitcoin and all that sort of stuff. This is an old clip, just because I've seen it. It comes around just to sort of get people up to speed with John McAfee's opinion. He's the guy that hacked basically the government defense. He gave everybody in the government free laptops because he was an antivirus guy, and then fucking hacked them all because he was paranoid about them being onto him or tracking him, something along those lines. Anyway, this is who he thinks made Bitcoin.
Who is Satoshi Nakamoto?
Doesn't want to be known, but if you want to find out, I mean, listen, everybody knows who was involved back then. In history,
Right.
Google,
Right.
They got Dr. Adam Back. I mean, Craig Wright was there. A
Was
whole
there?
bunch of people were there. Who is Satoshi? Well, that's the author of the fucking white paper. I don't know if they flipped a coin, drew straws to say who writes it. But if you want to know which one it was, run some authoring software against it, because everybody involved, especially Dr. Beck, had written dozens of technical papers. Let me give you some clues. In Satoshi's white paper, every word that has dual spellings for American and British English is British.
It's all British, yeah.
It's all British. Every sentence is followed by 2 spaces. Now that's a minority choice in most papers, but 2 spaces. Now, there are only 2 of the accused who were British, and only one of those has 2 spaces in every one of his papers. Figure it out, people. It'll take you 15 minutes. But he doesn't want to be known. I'm not going to name it.
Yep. There you go. All right. We basically just said it. So that's who he thinks made Bitcoin, not Eppenstein. Hey, anybody that doesn't like Cardano for whatever reason, maybe you lost all your life savings on it, you got sold a lie by Charles Hoskins, then, if you are, is it sadistic? If you are sadistic, or whatever the word is, you'll enjoy this.
Say, Charles, you're rich. You can ride it out. I've lost more money than anyone listening to this. Over $3 billion now. It'd have been real easy to cash out. Just walk away. And do you think I honestly care if I lose it all? Do you think I'm doing this for money? You're pretty mistaken if you do. There's a reason I'm not in the Epstein files. There's a reason I didn't get rolled up in FTX. There's a reason why when all these scandals seem to happen, my name doesn't seem to be mentioned in them. Say, Charles.
That's a good example of somebody's ego saving them from getting caught up in other events. I must be mistaken, because I definitely do think that he did it for money. Absolutely, his life's changed because of that. But also, I think he did it more so for recognition. He's got some sort of complex where it's just never enough. All right, so this is from a little while ago, but I just want to show you the severity. If you don't understand how hectic these liquidations are, even starting from basically October 10th last year, where a lot of my holds got fucked. Basically, it was the largest liquidation in crypto history. But it still continues. Okay, so a lot of people are still just getting completely wrecked. It's basically just malleting every single person that is interested in crypto, just bludgeoning them to death every time people go long, or thinking that they're going to get their favorite altcoin at a discount. They just get so Bitcoin's altcoins are moving down faster and harder and more aggressive than ever seen before. Ever. All right? Ever. So crypto is pretty fucking rough going at the minute. And that, again, I'd be surprised if anyone's even watching this, all right? Because probably 90% of all people that had any interest in crypto whatsoever have just been obliterated. And that's usually what happens before the markets, the market cycle. It just bludgeons everybody to death. It pauses. You've got a brief couple of weeks to buy the bottom where volatility severely contracts, and then it starts moving on. Moves in silence. It takes ages for the success of the crypto market to reach retail, and then once it does reach retail, it's the fucking top. All right, but so not everybody is short at the moment. There's a lot of longs going on still, and there's a lot of hope still in the market, unfortunately. Now, in saying that, this market is very PvP ranging and just choppy, and it is completely designed now that most of retail is out. It's basically bot versus bot, and designed to take any large positions out with short, sharp movements, liquidating any sort of decent leverage 20x plus. That's what's going on. Okay, it's just max extract from anybody that has the goal to work their way back into the market with size. That is how the market is right now. That's where it wants to be. This is a short-term outlook. This is thinking like a retail plebes trying to still hang on and trade the market, and which is fine. It's difficult trading conditions at the moment, but all you need to do is adjust your capital to suit. Now, most people can't do it. It's very difficult, right? But instead of trading with $1,000, if the difficulty rating or the uncertainty rating is higher, you can keep the sword sharp and you can trade with $100. Nobody wants to do it. Probably nobody will do it. But if you continue trading with your current system or practicing and learning, and when the market gets easy, because the difficulty of markets, they come and go and change rapidly. So if you keep the sword sharp, and then the market goes easy mode, there's a lot of new money to, profit from, then you will be ready for that. So I do highly encourage people to stay vigilant and interested if you can. And if you want to zoom out from the short term and feel here's a video from Paul Tudor Jones, one of the best to ever do it. Very interesting outlook on it all. We'll just have a little listen here.
What would I want to have? I'd want to have a combination of gold, crypto, and my guess is that I think all the ingredients are in place for some kind of a blow-off. Will it happen? Again, history rhymes a lot, so I would think some version of it is going to happen again. Right. If anything now is so much more potentially explosive than 1999. 1999, we were looking at a rate hike in November. Now we're looking at a rate cut. We were looking at 4 more rate hikes before we actually topped in 2000. Now we're looking at 3 or 4 rate cuts, probably at least. So you have monetary policy that's going to take us to real rates of 0 or less, probably, depending upon the next Fed chair. And then the big difference is, obviously, fiscal policy. We had a budget surplus in 99, 2000. Now we've got a 6% budget deficit. So that combination, that fiscal monetary combination, is a brew that we haven't seen since, I guess, the post-war period, early 50s, something like that. And that was crazy times, right, coming out of the war.
But you think that most people who are watching us now, you need to be in this market now. But then the question, as I said, is you have to jump off the train before the train crashes. If you're suggesting the train is going to crash.
I'm not suggesting the train's going to crash. I'm suggesting that we're in a period that's conducive for massive price appreciation in a variety of assets. Will it happen or not? I don't know. There's, if you kind of just look, if you just think about the leverage that we had in 1999, you look at margin debt, and then you look at today margin debt, but you have to throw in leverage ETFs because people don't use margin like they did back then. We're probably a little more elevated than we were in October of 99. It will take a speculative frenzy for us to elevate those prices, right? It will take more retail buying. It'll take more recruitment from a variety of from long-short hedge funds, from real money, et cetera. It'll take a combination of those things. It's not going to go up without flows and without a story. The story's there. It's the combination of the most unique and aggressive fiscal and monetary conditions that we've ever seen.
Okay, if you're right, who are the winners then in that, and who are the losers? Because right now we're looking at an NVIDIA obviously being a major winner. Even AMD today, major winner, but there's this unique arrangement that's almost circular.
The circularity makes me nervous. I would say, and I'm going to think of it in broad terms, I think what the markets are telling you, this is an inflation story down the road. If you look at the biggest winners, right? The biggest winners are gold. I think it's up 46, 47%. Bitcoin, I want to say it's up 50 or 60. I'm not even sure. There's a Morgan Stanley basket that's a retail flow basket that has all the meme stocks in it. It's up 67, 68%. So it's really what retail jumps on. So crypto, digital gold, that's obviously something that's very, very appealing.
And does that mean you're jumping on all?
You see what I've done there? Do you see what I've done there? All right. So one of the best to ever do it, Paul Tudor Jones, saying live on television that look again. Saying live on television, literally on the day of the top, he's shilling crypto. He's saying that it's an inflation hedge. It's up. He said markets feel like 1999. He said blow off top. Probably not. No train crash. And now what are we? We're basically 50% down. So this is sort of part of the whole narrative that I've started on this day, is that you don't fucking know. You don't fucking know. We'll take as much as we can from all of these professionals. All right, but again, going back to the narratives, going back to people's opinions, going back to what you see, it all leads back to having two types of mindsets. You have the long-term investing mindset, and then you have the see it how it is trading mindset. So while Paul Tudor Jones is there telling you that I want to have positions in Bitcoin and crypto, we flick over to our chart finally, briefly, on the day of 124K. And one of the biggest bull traps there's been in quite a long time, right? So bull trap right there, bang. That was literally the day that he said it. Right on the bull trap break of the range in Bitcoin. Market comes up, breaks previous high, boom, 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 and then Paul Tudor Jones, along with plenty of other large, big names, they shill it. They shill it all. Now, this is the whole thing. We'll wrap this up now anyway. But this is part of what I'm trying to get at, right? Is that no matter what underlying narrative there is in the asset, especially in the larger one, well, especially in the shitter ones, because if you're in a shit altcoin, not a single thing's going to fucking save you when the team starts dumping on it. Not a fucking thing. Not even the future of it. If the team starts dumping on it, not even any promise given, any word, any contract, nothing is going to save your money that is in that shitcoin. But when you're looking at a larger asset, something like Bitcoin, where you had all those narratives, all those things lining up, everything, billionaires. Now, I don't think Paul Tudor Jones, and I could be wrong here, and I most likely am. I don't know if there was malice involved in what he's saying for him to say that right there at that time. But what I'm saying is, like, somebody that is a fundamental analyst, you know, you can just line up everything. You can literally line up everything, every narrative, every talking head, everything that could be positive for you, and then the market just literally has done nothing but go down ever since that happened. Which leads me to the fact that there is nothing more important than the chart. Anyone can say anything, you can think anything, but all that happens with the price action and the chart is the reality of the situation. Okay, so you could have said, you listen to Paul Tudor Jones, you buy right there, hearing him say that there's going to be no train crash whatsoever, and you've just lost half of your money. Now, this is a soft transition just to the chart real quick, and then we'll wrap it up. So what you see here, basically, there's two types of price behavior. Okay, there's ranges, there's traps within the ranges, all right, and then there's trends, trending, ranging. Trending happens about 30% of the time, ranging happens the other 70%. When you are looking at price, you must first distinguish whether the asset is trending or ranging. Trending or ranging. So that's a trend. And another bull trap, more or less, right? So most trends continue, most ranges continue until they do not. Bull traps typically break the previous highs and then go the opposite way. All right, so this price action here, as you can see, that's the previous low in 62K. So, you know, in the odd famous occasion here on Bitcoin, I'll just zoom in a little bit, 12-hour chart, zoom in a little bit more, 4-hour chart. You can see what happens a lot of the time. Okay, see this here? All right, there was the trend, and then it goes deep, and that usually holds. The first low is usually the most extreme low. It's powered by a lot of liquidations. It holds while the price starts to form a range, trades the range until it's ready to either go lower or go higher. And if it does go higher, there's two ways that it typically goes higher. Either you make a obvious higher low, which would usually probably happen here, and then it would go higher, or you make a lower low, so something like that, it comes back into the range and then higher. They're basically the two ways that a range reverses, if you will. Obviously a higher low or lower low seems pretty obvious, but when you're looking at it in real time, it's quite difficult. What that means for this, well, what that means right now is this is a significant low that we can see right here, what we're talking about. the price is going to do one of two things. Like we said, it's very simply going to either break the range up or break the range down. But until it breaks the range, you're best just expecting it to continue. Now, for a range to continuously continue like this, you should be pretty happy because it's in the 60s. Now, as the price continues to go lower and lower and lower, it's more like the urgency of something. If you are a Bitcoin dollar cost averager or a long-term Bitcoin investor, you sort of see this, like what we've been talking about in the blockchain bulls. It's sort of like this. It's like, okay, yep, you still just, you know that the price has been trending up for ages. It's at really highs. If you DCA and you just DCA in a small amount, you see it ranging. Okay, could this be just a big high, a low, and then the price continues? Yes, it definitely could. Was 80s a good place to buy? Well, you'll see a lot of the big names that they were still buying in the 80Ks, but it's all about how much. This is the whole deal. This is the whole deal with everything. How much? So if you get a tip from a mate about a stock, how much are you putting on it? All right. Some people will say, "Oh, fuck him, he never gets any right," and then that's his biggest one that he's ever gotten right. So you should always, not financial advice, but in my experience, if you can always allocate something to an idea as a bare minimum, and then how much confidence or conviction you have on that idea, you relate that to the amount spent or put toward the capital put towards or raised towards that idea. Okay, so I'm like, all right, DCAing, consistently here, relatively small amounts. There's a good chance that the market continues. If this does continue to higher prices, I know that there's going to be some good easy trading and retail will come back. Now, again, then this happens, relatively big flush, something quite painful like this happens. Retail is starting to diminish. You're coming close to what's known as where are we? All right, so we move to the daily chart here. We're looking for moving averages. This is the last thing I'm going to say, and then I'll see you tomorrow. Moving averages, 200-day moving average is all the way up there. We go into the 200-week moving average. Ready? There it is. The 200-week moving average. I'm probably on the wrong chart. Where are we? Basically, yes. Yep, this is the right chart. Okay, there's a 200-week moving average. Okay, so now we're ranging just slightly above the 200-week moving average. You can see here in the past, it does come below the 200-week moving average at times, sometimes very briefly, sometimes it holds onto it. And sometimes it sits briefly underneath it, depending on the market. See this? So that was fucking ages, actually. That was like 6 months under it. But the 200-week moving average is something that's looked at by many eyes, many eyes, and it signifies a bargain. Basically, people will get off their ass to buy it at or around the 200-week moving average. Very big, important line. All right, so things like that. Okay, so what I'm basically getting at is more urgency arrives as it becomes a more significant buy and a more value buy. So you just start larging it. Say if I was putting in $100 a week here, okay, well, I'm going to have to change a few things around in my budget because now I'm going to be putting $200 a week in here. And then, it goes down into the 40s. All right, we're putting $400 a week in and I'm canceling my Netflix subscription. You know what I'm saying anyway, all right? So it's the urgency that changes and accepting the fact that no matter how big the brain, if you've listened to enough people, you've listened to enough people be wrong. So all you can do is just try your best and adjust your amounts allocated by your own conviction. I'll see you tonight. We'll go through a couple. yeah, I'll see you tonight. We'll go through a couple of altcoins, and I'll talk to you then. Ta-ta. Good to catch up.